Here with me now to discuss the global race to carbon neutrality is Changhua Wu, CEO of the Beijing Future Innovation Center and Executive Director of the Professional Association for China's Environment. Changhua, welcome back to CGTN. I wanted to ask you, how should a carbon trading market work? I mean, how will Chinese officials deem success?
Thank you for having me back again. I think last Friday is the first day trading of China's national carbon emission trading mechanism, proven to be successful. It's regarded as successful because the operation was run very smoothly. We do not see any major glitches in our process, meaning all the pieces of the puzzle of the system were in sync with each other. If you look at the participation from the 2,225 power generators, they're very actively participating. Then if you look at the volume, the traded volume, 4.1 million tons credits, card traded, and also, of course, about $32 million in terms of the flow transactions occurred as well. And then, of course, the last indicator is the price. It's somewhere between $7 to $8. That's pretty much within the expectations of the designer or regulators of the carbon market so far. So in a nutshell, I think the first trading, the beginning of the trading proves very successful.
$32 million in carbon trading market in the first weekend. Are you surprised by that figure?
Not really. I think the success is pretty much a sort of unexpected one because the China carbon emission trading market, with a particular focus on the electricity sector today, is highly sort of controlled, managed, or administered. So with the design elements together, we pretty much even knew actually before the online trading, we knew where it's going to go. But it's more like the dynamic of the market. It's sort of interesting, and particularly the pricing part. So no, I think it's successful, but not really so beyond anyone's expectations.
So how will China's system be different or perhaps the same from other carbon trading systems currently in place, for example, the EU?
Well, emissions trading mechanism is one important tool, we call it market-based instrument, to help price carbon. And so the logic of the design of the mechanism is the same, right? If you look at the China ETS, the design from the very beginning was pretty much following the experience of the EU ETS. So in many, many ways, actually, the two are very similar because the logic, as I said, the crucial pieces of the puzzle, even the mechanism, the system itself actually is very similar. The biggest difference today actually is so the EU ETS is a cap and trade market, meaning there is a clearly cap of emissions already, and the policy goals actually in the EU pretty much say down, right, the percentage of reductions. And then the EU ETS is pretty much designed around that to deliver that goal. China today, China doesn't have a clearly set level of a cap yet. So it's pretty much with something we call like intensity benchmark based, meaning China has more clearly the carbon intensity target, starting 2005, 2010, 2015, 20, now 2030. And so we do not know yet what the level will be. So today it's not a cap and trade. So that's the biggest difference. But in the near future, we know the alignment is definitely the trend because China will clarify the level of the capping of its emissions, and that's going to be integrated into the design of the carbon trading market today, and that's going to be the next step.
I want to bring this all into layman's term, but how does this differ for something we're all more familiar with, which is a carbon tax?
Well, carbon tax is another tool. If we say pricing carbon has two major instruments, so one is emissions trading, the other one is carbon tax. So comparatively speaking, carbon tax seems to be more clean-cut policy instrument, meaning there's a fixed sort of rate, the tax is there, then it's applied universally, and but it's also incentive actually for the company to invest in cleaner, production or cleaner energy investment there. And then, of course, there's more flexibility for the emission trading. So the price is not fixed, so it's going to be moving up and down depending on the trading activities on a daily basis there. And so there's more flexibility. And also there's another touching point actually for the emission trading with a particular focus actually to help identify the most cost-effective solutions technologies or solutions or products, that's going to incentivize more investment into those sectors so that we'll be able to achieve the scaling of the deployment of those products or technologies at a much faster pace.
Is all of this a game changer in terms of climate change or just something to slow down carbon emissions?
Well, I think internationally, it is a very crucial part of the puzzle, if you call it game changer, because we all know there is a cost, right, in order to reduce the emissions and achieving carbon neutrality is there. So we do need the market-based instrument becomes an absolute sort of necessary tool to drive that. I think the game changing, particularly for China today, it's more like at the foundation side, because in order to do the trading, we have to make sure we have data collection, good quality of the data. We have to make sure we have the monitoring system, verification, reporting, with all this sort of elements together in order to make sure, everything is built upon a solid foundation. I think that part actually probably today is more significant than just trading activities itself.
All right, Changhua Wu, thank you for your insight.